Hello, Market Club members everywhere, and happy Monday to you. It is the 20th of June, and this month is rapidly evaporating. But the big news, of course, this week is going to be the Brexit vote on Thursday, the 23rd. It's really pushing the markets up today. There's a poll, two polls that came out over the weekend that was saying they're going to stay, which obviously is good news for a lot of people. We're going to be sharply higher this morning, probably up about 1.2% when we open. But it really doesn't take the market out of the gains. As you can see with our trade triangles, all of our trade triangles are positive on this market, and I think that's the key thing to look at. We are positive on the weekly and also on the monthly, which are the important ones. Only the daily is negative, but we could see a big pop maybe to 2100, and the reality is it going to go higher? I'm not so sure. The key thing looking at this market right now is we do have some negatives, and that's the important thing to look at. We are below the 50 line. That's not a good sign. And certainly this line here at 2050 is a key line in the sand, so to speak. If we go below that, we'll see a lot more selling coming in. And of course, if we go below this level right here, which is going to be another negative sign. So again, it's a couple of things you've got going here, and that is we've got a little bit of a divergence. You can see that right here. Prices going higher. Not so dramatic, but nonetheless, there's something that just doesn't feel right with this market. So be careful. This is going to be a very volatile week. Rumors are going to be rife. Brexit, they're going to leave, they're going to stay. It's going to be all over the board. So be careful. That's the operative word this day. Looking at the Dow, you can see the Dow actually isn't acting as well. You have a weekly trade triangle that's negative, indicating a trading range. We talked about this last week. It's a minus 70. So again, this just doesn't look so great. And we talked about this sort of box effect that the markets really haven't gotten out of for the last, since April. It's sort of chop, 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 and it needs to go one way or the other. Either we need to make a new high up here somewhere, or a new low down here. So we've got to break out of the box, and we will break out of the box, and Brexit may be the catalyst that pushes out of the box. So be careful. We are below the 50 line here, not a good sign. We do have a weekly red, which is not a good sign. Only thing that's holding the market up right now is the green monthly. So let's pay close attention to what's going on. Sort of changing up on you a little bit today about here's a stock, Bed Bath & Beyond. All of our trade triangles are all negative. We do have a big bounce from these lows. You can see the lows we're talking about right here, and I think that's the it sort of got to this level of bounce. Not unusual, but the key thing to remember here, in my opinion, is if we take this off the screen and go to maximum, you can see this, and take all of our trade triangles off because it gets a little confusing when you see all those things. So here you are. You sort of made the rounded top in the stock. This is Bed Bath & Beyond, a brick and mortar store, and they've not been doing well when they look at the competition like Amazon. So here's a sort of like rounding top. You could put a trend line through here and say this is the head and shoulders. So this is the left shoulder, the head, and the right shoulder. Now if you measure down from this level, let's say here to here, flip that down, you're taking the market, let's say from 90, and we'll call this 55, let's say. So what is that? 35 points from 55. Takes it down to 20. And then it takes it all the way back to these levels right here. I could see that happening quite easily with this stock. So pay close attention to it. Let's scope this in. Clear the screen. Scope it in a little closer. You'll see we're below the 50 line. That's where resistance is going to come in. I think that's probably an area to short this market. Again, I think it's going to break through these lines. The key thing is if it goes over 46, then I would say it's a different ball game. But for now, that's the key level to watch. Another stock that's really not doing that well is Alphabet, which is Goog. Big down day. Really heavily oversold. This is where the support comes in for Goog. And I think that's the operative place right here. So the lows we saw on Friday are very, very important. If we close below that this week, I think that would be a negative sign indicating further weakness, especially if you see how far this market's come and where it's really going. We've talked about, Google is really a one-act show, just advertising, and search. But the reality is if it breaks below that level, it's going to put more pressure on and maybe push the market down to maybe the 600 level. So we'll watch that very carefully. But again, if you go closely in the last 3 months, you see we're way below the 50 line. That's when it really started to accelerate on the downside. This is an interesting stock. Apple, we talked about this before, but look at the trade channels. Monthly down, weekly down, daily down. Everything's negative on this stock right now. We're below the 50 line, another negative sign. So this is not looking great for Apple. You remember that we talked about this before. We had a signal right around here, right around the 104.88. This is when Icahn got out of his position, pretty much the same way. A big drop. We came back up, and then we had Warren Buffett buy right around these levels here and pushed it up, and that's come right back down again. Now remember, Warren Buffett is a long-term investor, for years and years and years. If you're a long-term investor, maybe it's a good buy, but we don't trade that way here at MarketClub. It's more short-term, or intermediate term, I should say. And right now, the trend right now is on the downside. You can see quite clearly with the move below 50, not a good sign. All the triangles negative, not a good sign. Okay, let's take a look at the NASDAQ. NASDAQ's going to open higher, as I mentioned, but a couple of things you want to look at here is really we're below the 50 line quite clearly. You can see it broke through here, and it's still down. We may see a pop. We will see a pop in the morning, we should say, but I don't think it's going to go that far. I really don't think it's going to go that far, and that's the key thing. If we go out in this market and look a little further and see, let's say, go 6 months, just has a heavy feel to it. Just looks like it's just beginning to roll over, but the reality is you're still stuck in this box. We talked about this before. You're still in this broad trading range, and you can extend that to here. It really just hasn't gotten anywhere since really mid-March. So I think you need to break out either, as I say, on the upside or on the downside. Something has to happen, but right now it's pretty negative on the RSI. We're not, let's just clear that up, but the weekly and the monthly still green, still positive. So just be close and pay close attention to that market right now. It's going to be very volatile this week with Brexit. This is July gold. July gold, you can see it had a little bit of pressure. This is as of today. You can see it's just does not have a lot of zip to it. But again, longer term, we still think this is going to go higher in our opinion. So let's really just pay attention to this market. I'd like to see it go sideways for a lot longer, maybe another 3 weeks, and then start to go higher. But for the moment, it's the biggest mover for the year on the upside, and we just need to watch it for a continuation and a close over the 1300 level. We mentioned the 1300 level before. This is a key level, and I can't stress that enough. If we just let's scope this out, let's say to 2 years. I can't stress how important the $1,300 level is. A close over there, then we're going to see this market. This is crude oil. We actually covered our short position today at 48.57. That was for a small loss, but generally speaking, the crude oil is still choppy. This is definitely a key area to watch. 46 on support and really 52 on the upside. So you have a broad trading range there. We just peaked over the 50 line. So again, it's going to be very volatile with the Brexit this week. So I would caution any position you take, be it small. Don't bet the farm on any of these positions, whether it's in the indexes, gold or crude oil or any stocks. Just wait until the week's over. Then we'll have a much better idea, or towards the end of this week, where things are headed. Hey, I'm Adam Hewis, and have a great week. Stay tuned. We'll keep you updated with the Brexit and whatever else is going on in this world. So thanks for watching today.